My name is Hugh Agro. I'm the president and CEO of Revival Gold. We're advancing the Beartrack-Arnett Gold Project located in the western U.S. state of Idaho.
Hugh, good to see you, sir. Very good to see you. Although tricky times, a lot of nervous investors out there. How are you feeling about the markets?
Yeah, this is par for the course, right? We're a cyclical commodity in gold, currencies that swing up and down, tumultuous times, inflation unexpected and now being responded to by strong action among central banks. And so lots of turbulence, but turbulence creates opportunity. And we're able to attract solid people because we've got a solid project. We're able to keep those people on the project. We're able to advance it. We've got drilling going on, engineering studies, lots of work to advance this project outside and beyond anything that the gold price might do. So actually a good time to be working.
Well, it's a good time to be working, but here's the thing I heard the other day from a CEO, which was, it just made me think. He said, yeah, it's kind of turbulent times, but in actual fact, it's doing us a favor because some companies are retrenching, not spending money, laying people off. We've got easier access to people, to drills, and we're actually able to get on and do what we want to do. And the inflation isn't such a burden to us. I mean, are you seeing a bit of that? Well, can you at least understand that?
Well, first of all, inflation is a reality, and we're seeing our drilling costs going up quite dramatically over the last couple of years. And availability of rigs has certainly been a problem for us as well as everybody else in the United States. So I'm actually happy to see a little bit of a relaxing of that pressure. We want to get a second drill rig on the project. And if we can find one that works for us, we'll get it going. So yes, creates opportunity for us. We're cashed up. We've got the full crew, and we've got lots of drill targets.
Okay, just want to kind of stick with the kind of broader market stuff at the moment, which is U.S. Government talking a big game about being supportive of mining more broadly at federal level. You know, and I'd be intrigued to see what you've got to say about what's going on in Idaho. And yet, that's on one hand, and yet with the other hand, permits, licensing seem to continue to be an issue. So the US seems a very confusing place at the moment to do business.
It is. All politics are local. And I think the key is to identify local interest in exploration and mining, job creation, environmental concerns, and to work with those local interests. And that's what we do at Beartrack-Arnett. Of course, we're the largest past producer in the state of Idaho, so we've got a long track record of performance for the community and for other constituents, state government, strongly behind responsible job creation in the state. And so I think in our situation, it's pretty clear that we're in a favorable environment. Now, broadly speaking, Biden administration is under pressure. And I think we've got the interim elections coming up in November. We'll see how the House plays out for the 118th Congress and what happens from there. But we start with what's local, and what's local is support for the project and what we're doing at Beartrack-Arnett.
And what's your sense of, I'm just going to stick with the politics. I do want to move on to gold in a second, but in terms of the politics, Biden administration under a lot of pressure, approval ratings quite low for Biden himself. Do you expect the Democrats to actually try to kind of soften that blow by increasing spending in the U.S.? And what does it mean if Republicans do come back in and take the House again?
Well, that's a loaded question for somebody who's a strong believer in the outlook for gold. I do not think that our political system has the wherewithal, the strength, and resolve to combat some of these challenging problems that are faced in modern society. And managing currency is the one that's of principal interest to me. I just don't think they'll be able to do it. I do think that the Fed will capitulate at some point here. We saw an increase in money creation, the M2 supply of money in the period through COVID of about 25%. It's no question. There's no question about the reason for inflationary forces in the marketplace. To me, it's money printing performs on the price of currencies, the value of currencies undermines it. And And so gold, I think, is the place to be. It's proven itself over the long term as the place to be when currencies are being debased. So talk about political resolve. I think when you're speaking to somebody such as myself who sees very clearly that political resolve is not there, and that we do not have the support for our currencies. I think we're just in a market that's favorable for gold, favorable for gold equities. If you think about in terms of the leverage that a gold project like Beartrack-Arnett has, with 4 million ounces of gold open in all directions, and at a finding cost running at $5 an ounce, that is a super place to be if you believe in gold and if you believe in what we offer.
So, okay, you're arguing the gold thesis there, and obviously events of the past few years in terms of printing money, you think would have had a bigger reaction. But the reality is, gold prices come down again in the low 1700s at the moment. It's that will kind of slow down the M&A activity, which was heating up a bit for a while. What are the knock-on effects for development companies like yourself in the context of the timeframes that we should be looking at? Because because right now I think we're measuring this kind of dip in the marketplace, and it's risk off, hands off, cashed up, etc. attitude. But the reality is that it's a kind of short moment in time, and these dips have a habit of coming out the other side, and off we go again. So, but for you guys in the short term, what does the low gold price do for you? Does it affect you at all?
You've said a number of things there, and we were talking offline about short-term decision-making, knee-jerk reactions, and I think this is the time to take perspective. And I want to just throw a couple statistics out there. Number one, the pace of global gold production is running at about 120 million ounces of gold a year. And meanwhile, the pace of discovery, that is new gold projects, let alone financing, permitting, construction, all of those things, is running at about 10 to 20 million ounces of gold a year. So 1/5 the rate of production. And that cannot last forever. And the success that the junior explorer developers have had in filling those pipelines is unquestioned. It's companies like ours that go out and create these projects, deliver the ounces, deliver the permitting, deliver the construction plans that feed the industry, and the industry needs these projects. So big picture, we've got a brewing storm here for the larger producers that are continuing to produce gold without filling their cupboards. The second point is that the price of these explorer developers has declined precipitously. The average takeover price is running historically in the last, call it 7 years or so, has been about $65 an ounce. The average price of these things are trading at today is probably about $30 an ounce. And again, I remind your listeners that Revival Gold is trading at about $7 or $8 an ounce. So lots of value creation. Is there risk? No question. We have risk. We have to advance the project, de-risk it. We're not going to be producing cash for a few years to come, and we're going to have to finance through that period of time. So there is risk, but the return is exceptional. And with this downturn in the market, we've created what I think is an even more compelling opportunity for investors. And considering the fact that in our case we're funded, we're delivering exploration results and engineering results as we speak. That's a pretty compelling timing. And so no knee-jerk reactions here. In terms of our operating plans, we continue to deliver. We're moving on to our second drill hole in the Joss area. We've been doing the engineering study work that will support our PFS plans. We've got a great crew working away on the project safely. And I think this is a very good time to enter the stock.
Well, yeah. I mean, but I think a lot of CEOs would argue that. But I want to focus on the bit which actually backs it up and validates it, right? So 4 million ounces, all categories, obviously. But was it? I think it was. Is it 2.1 in terms of M&I? Is that right? I think so.
That's correct.
Okay. Yeah. So, but let's talk about some of the things that you've got, right? You're working through the kind of PFS process at the moment. The objective of that is what? What are the kind of economics that people should be cognizant of from the PEA, and obviously what you're going to try and achieve with the PFS?
So PEA, 150 million of NPV at 1750 gold. And so that is our first phase aspect of the project, $50 million a year of free cash flow. And remember, we're working from a brownfield site, and so we've got a lot of the infrastructure in place already. And so the engineering step, the next engineering step, this PFS, will take us to a point where we can turn the switch on our formal re-permitting process. And so this is the next step in the evolution as we move towards producing cash flow from the first phase project. We haven't given specific guidance on when exactly we'll complete permitting, but we're targeting something in the order of 2024 to begin construction, and then to produce gold and therefore cash flow. Now, meanwhile, we continue to explore. We've got this large opportunity for a much bigger mill phase of operation. We've got a lot of drilling to do there, and we've started with that in this Joss area that we're drilling right now. And I can tell your listeners that our first drill hole went through the mineralized zone as expected. We won't have assay results from that until August, but we're on track. And we've got the second hole coming in now. We'll head up to the Haiti area. We're going to add to the oxide resource there, and then be back down in the Joss area for those high-grade targets underground. Busy season for the fellows on site.
Definitely busy. I'm just going to work out if you are as nervous as the market is, in the sense that you had a plan. Do you have to adjust that plan in any way, or do you have to take advantage of market conditions or react to market conditions and readjust that plan? Because you've kind of got the heap leach component here. You've got an underground component, and you are sitting on a bunch of infrastructure too. So in a meaningful way, you kind of got optionality, right? So have you had to tweak the plans?
We haven't. No, we've taken on board the increased cost environment as part of our recently published resource. That was in May. We'll have the technical report filed this week. And so that gives us a very good basis upon which to update the PFS from a cost point of view and from an engineering point of view. So I think we're in good shape there. We're at about 6.5 million of cash. So we're in good shape in terms of our cash. No need to go out and try and finance in this summer season where we're in the doldrums. Typically, as you know, the gold price moves up in the August-September season. So there's some historical seasonality to the gold price and the market. And as I alluded to earlier, I do not think the Fed's going to hold the line on interest rate bumps. I think it's inevitable that with the amount of currency that's been printed over the last 3-4 years, that we're going to see higher gold prices in the future, and that's going to bode well for our project. Now, the other thing that comes out of these moments of crisis in the sector, of course, is opportunity for corporate transactions. And we are certainly very active looking at opportunities to bolster our portfolio, to participate in industry consolidation, either as a buyer or as a seller. If we can deliver up a better future for our shareholders, we absolutely want to surface those kind of opportunities, and these are the moments when those opportunities arise. So we're hot on the trail.
Well, is that a reality? Because you've got, obviously equities are down, so therefore items are cheap. I think there's no arguing that, and there's going to be a lot of cash constrained companies with varying qualities of assets. But is the money around, and have you got the appetite to go and raise money if it becomes expensive money, because everything's relative? Your stock is down as well, right?
Yeah, they're down dramatically, and so yes, we will take exceptional care when we think about equity funding requirements for anything that we do and our budgets going forward, but we've got to remember that it's relative, and we look forward to the day when investors come back to the market, and can we create a better upside scenario for those investors. So I won't say it's easy, but I would say there's more opportunity right now than there is when times are going well. And I think some of the C and D teams have exited the business. Some of the C and D investors have exited the business, and now we've got solid shareholders. We've got real opportunities, and those that those that are funded will continue to deliver results for their investors and create opportunity. Again, I go back to the fact that the sector needs to replace the projects in the pipeline, and the only way to do that is through exploration and development, diligent work, and so if we can position ourselves with a project of merit, it will be rewarded. The equity investors will come back and they'll be looking for those projects well positioned, which haven't blown up their share structures and that are delivering results, have the team in place. Those are the kinds of things that we can focus on. We can't control the gold price. We can't control what's happening with interest rates, inflation, all those things, but we can deliver on exploration, development, engineering plans, manage our monies carefully, and look for opportunities in the fray.
Do I kind of love moments like this when the wind blows hard and branches fall off the trees, because there's it's like a clear out in a way. And you said it there, the C and D teams struggle and they go away. The C and D investors go away. Perhaps the fair weather investors go away. I don't wish them ill. I don't wish them bad. And no. It's never good to talk about anyone losing money. But at the same time, it kind of clears the deck somewhat for people to kind of focus on what good looks like again. The bit that worries me is when the C and the D management teams come back again with their fair weather projects. So, do you think it's a kind of a good time for companies like yourself with slightly stronger fundamentals in that sense? You kind of expect to have a stronger bounce once the market does come back.
Yeah, I do. I do, and I think I think we'll have created we've laid the foundation for that to happen by being here, by being visible, by speaking with you, Matt, and communicating to the market that we are present, we are delivering results, and we do intend to continue performing. So yes, I think the answer to that is yes, and yes.